There is indeed a foolproof trading method in the stock market that guarantees profits from market fluctuations. You might not believe it, but at an investment seminar in Kuala Lumpur in 2022, I met an amazing investor who used this simple method to grow his assets from hundreds of thousands of dollars to tens of millions of dollars. I still admire him greatly. We work in the same industry, so we quickly became friends and still frequently exchange stock investment experiences. Today, I want to share this method with those who need it. Good luck to everyone, and I hope to share this joy with you. The little red heart symbolizes good luck. Let's get straight to the point. This method seems simple, but it actually only has 3 steps and 3 key elements. If you spend 2 minutes reading this article, you will definitely be inspired. We will explain each step in detail, from stock selection to buying, position management, and closing. First, familiarize yourself with these 3 key steps. Step 1. Stock selection. First, select stocks that have already reached their daily limit up. Add all stocks that have hit their daily limit up in the past 10 days to your watch list, but exclude stocks that have hit their daily limit up for 3 consecutive days. This is done to avoid buying overpriced stocks that have already been sold off by large investors. The second step, use the monthly chart to identify trends. Open the monthly chart of the target stock and only focus on stocks showing a monthly MACD golden cross. A monthly golden cross indicates an upward trend and is an effective profit indicator. The third step, use the daily chart to find entry points. Switch to the daily chart and carefully observe the 20-day moving average. If the stock price is close to the 20-day moving average and the closing price is a high-volume bullish candle, then establish a buy position without hesitation. After buying, use the 20-day moving average as your primary benchmark. Hold the position as long as the stock price is above the moving average. If the stock price falls below the moving average, sell decisively. Finally, remember the 3 key strategies repeatedly emphasized by experts. First, if the stock price rises by more than 30%, reduce the holding to 1/3. Do not be greedy. Quickly take profits to reduce risk. The remaining shares can be used to continue profiting from price fluctuations. Second, if the stock price rises by more than 50%, halve the holding, retaining only 1/3 of the core position. Because these core holdings align with market trends, even if the stock price subsequently falls, you won't lose your principal. Finally, if the stock price falls below the 20-day moving average the day after you buy, sell immediately. This is crucial. Never let your guard down. The 20-day moving average is the minimum standard. Stocks showing a golden cross on the monthly chart are less likely to fall below the moving average, but caution is still advised. Even if you sell and the repurchase conditions are met, you can buy back in. Flexibility is key to survival in the stock market. This method has low risk and high returns. Stock trading may seem simple at first glance, but with repeated practice and continuous improvement, you can achieve stable long-term returns in the stock market. The key to stock trading is not using the fewest techniques, but mastering these simple ones. If you found this article helpful, please share it with friends who have lost money in the stock market so they can avoid repeating your mistakes. Next time, we will bring you more practical tips. Follow me.